process and produce mined silver. So there are knock-on effects which are making the supply deficit in silver even worse than it has been recently. And while the Silver Institute is looking at figures like a shortfall of about 80 million ounces, there are others now who are looking at the figure hitting something like 300 million ounces. So what we have with silver is a very, very temporary shakeout, if you like, which is the opportunity for the shorts in the paper markets to try and cover their positions. Investment demand, suddenly the public around the world, and particularly in Asia, say, hold on a minute, this is the cheap way into gold because we've missed gold. We can afford silver. So you can see that the squeeze on silver could be very, very intense. And it's squeezes of this nature. I mean, obviously, silver ran up probably too far too quickly, and some sort of consolidation made sense. But in terms of actual dealing in silver, what you had was profit taking in the paper markets, but there was absolutely no selling or no material selling anyway in the physical market. And indeed, since silver peaked, there has been a consistent flow of silver out of Western capital markets into China in particular, and also until recently India. And so, the underlying supply and demand situation, if anything, hasn't improved at all. There's been no shakeout of speculative positions. And it's just been an opportunity, if you like, for the Chinese in particular, and also the Indians, but I'm sure we'll come to that one later, to accumulate much needed silver. And this demand comes from industry considerably more than it comes from investors. Investors as yet have not really latched on to silver. There was obviously a little bit of speculative accumulation, if you like, of paper silver as it ran up from the 50 level up to the high of about 120. But that's not been material. And if you look at the open interest on COMEX, the open interest in silver actually dropped to the lowest levels we've seen for 20 years. What that tells us is there is a complete absence of bullish demand, if you like, within the futures market on COMEX. So silver was rising despite that. And the real test, I think, came from Chinese policy back in last September, when they restricted the exports of rare earths. They obviously, it turns out, also began restricting the export of silver because within 2 or 3 weeks of the restrictions on rare earths, there was a delivery crisis on the LBMA. I think that was on the 9th of October. Lease rates soared to around about 40%. Now, ever since then, despite the fact that the price in both spot and futures markets has dropped significantly, there has been, continual demand for physical silver. So as far as industry is concerned in China and also India, they really need the silver, and they will fall over themselves to continue to get it. This eventually will have an impact back on silver, because what we now see is, if you like, that we've got problems from the Iran war leading to a shortage of sulfuric acid. Now, sulfuric acid is a very, very important chemical when it comes to refining particularly non-ferrous ores. And of course, most silver is extracted from non-ferrous ores. The absence of the supply from the Gulf of sulfuric acid has been made worse by countries like China deciding that they've got to restrict their exports as well, just purely to protect themselves. This means that countries such as Chile and Mexico, who are significant silver mining nations, have a shortage of sulfuric acid in which to process and produce mined silver. So there are knock-on effects which are making the supply deficit in silver even worse than it has been recently. And while the Silver Institute is looking at figures like a shortfall of about 80 million ounces. There are others now who are looking at the figure hitting something like 300 million ounces. So what we have with silver is a very, very temporary shakeout, if you like, which is the opportunity for the shorts in the paper markets to try and cover their positions. And that's what they're desperate to do. They're having difficulty doing it, however. So I think the message to anyone who holds silver and is worried about the volatility, the answer is just grit your teeth and just stay with it, or use the opportunity to acquire even more. I mean, that would certainly be my approach.
Before we wrap up, let's zoom out for a second, because what we're watching right now is bigger than one headline, one candle on the chart, or one day of price action. This is not just about silver going up 50 cents, or gold pulling back after a strong move. This is about something much larger happening in the global system. We are living through a period where trust is being tested everywhere. Trust in governments, trust in central banks, trust in currencies, trust in debt markets, trust in the headlines, and honestly, trust in the idea that the old financial system can keep running the same playbook forever without consequences. And that is exactly why gold and silver matter. A lot of people still look at precious metals and say, why would I care about silver? Why would I care about gold? They just sit there, they do nothing, they have no yield. That is the old argument. But the world we are moving into is not the same world that argument was built for. Because in a world of rising debt, geopolitical instability, currency debasement, weaponized trade routes, sanctions, proxy conflicts, fragile supply chains, and central banks trapped between inflation and recession, the thing that just sits there starts to look very powerful. Gold does not need permission. Silver does not need a bailout. Neither one needs a central banker to reassure you on television. And that is why every serious conversation about the future of money eventually comes back to hard assets. Now think about where we are today. Global tensions are not fading away. They are multiplying. The Middle East remains a pressure point. Europe is still dealing with long-term strategic instability. Asia is becoming more economically and militarily competitive. Energy corridors matter. Shipping lanes matter. Semiconductor supply chains matter. Food security matters. The dollar system matters. And every time one of these things gets shaken, markets start repricing risk. That repricing of risk is where gold usually gets the first spot. Gold is the monetary metal. Gold is the one central banks understand. Gold is the one they quietly respect, even when they publicly act like fiat is invincible. But silver is different. Silver is the metal that lives in two worlds at once. It is monetary, but it is also industrial. It is history and future at the same time. It is old money and modern technology in the same metal. That is what makes silver so interesting, and frankly, so explosive when momentum finally builds. Because silver is not just a shiny rock. It is used in electronics, solar infrastructure, industrial systems, advanced manufacturing, medical applications, and more. So when the world talks about green energy, electrification, reindustrialization, military tech, grid expansion, AI hardware, and supply chain security, silver is sitting right in the middle of all of it. That is why silver bulls never really go away. They may get mocked, they may get early timing wrong, they may have to sit through painful consolidation, but the core thesis keeps coming back because the metal keeps mattering. And let's be honest, silver has a personality that gold does not. Gold moves like a king. Silver moves like it just drank 3 espressos and saw a breaking news alert. Silver is calm until it isn't. That is why silver drives people crazy. It can look asleep for weeks, and then suddenly it moves like the market remembered all at once that above ground supplies are tight, demand is real, and the paper game only works until confidence starts slipping. That is the part many casual viewers miss. Most people only become interested in silver after it already made the move, after the breakout, after the headlines, after the FOMO starts, after the mainstream financial channels begin pretending they always understood the story. But real positioning usually happens when nobody is excited, when the comments are quiet, when the chart looks boring, when everyone is distracted by the next hot trade. That is how these markets work. And the geopolitical side only makes this more important. Every new conflict, every new sanction regime, every new currency settlement outside the dollar system, every new shipping disruption, every new defense escalation, every new energy shock adds stress to the financial architecture. Maybe not enough to break it in one day, but enough to weaken confidence over time. And markets run on confidence. That is the key point. The system does not need to collapse tomorrow for metals to matter. It only needs people to slowly realize that the system is not as stable, not as neutral, and not as durable as they were told. That is when gold becomes a signal. That is when silver becomes a story. And that is when retail investors, institutions, central banks, and everyday savers all start looking at the same assets from different angles. Some buy gold because they want security. Some buy silver because they want leverage to the same macro trend. Some buy both because they do not want all their faith sitting inside digits on a screen, backed by policy promises and political incentives. And can you really blame them? Look around. Governments keep spending. Debt keeps rising. Currencies keep getting diluted. Wars keep threatening trade. Politicians keep promising stability. And ordinary people keep noticing that their money buys less than it used to. That is not conspiracy. That is lived reality. This is why gold and silver are not just investments to many people. They are a response, a hedge, a form of skepticism, a statement that says, I do not fully trust the system, and I want something outside of it. Now, does that mean metals only go up? No. Does that mean silver cannot be volatile? Of course it can. Does that mean gold cannot correct? Absolutely not. But zoomed out, the bigger picture is what matters. Precious metals do not need perfect conditions. They need persistent stress, and the modern world is delivering plenty of that. That is why, on this channel, we do not just stare at price charts in isolation. We connect the dots, because silver is not trading in a vacuum. Gold is not moving in a vacuum. Markets are reacting to debt, diplomacy, war risk, central bank behavior, inflation expectations, real yields, industrial demand, and public psychology all at once. That is why one random headline can move these markets. That is why one central bank statement can change momentum. That is why one geopolitical flare-up can turn boring metals into the most interesting corner of the market overnight. And this is where the memes almost write themselves. One day the mainstream says, nobody needs gold anymore. Next week, central banks are stacking it. One day people laugh at silver holders. Next week, they are posting rocket emojis after a $2 move. One day, analysts say inflation is under control. Next week, your grocery bill files an official complaint. That is the clown world element of markets. You can almost picture the meme. Fiat currency after another trillion in debt spending. I'm tired, boss. Or this one. Silver investors after waiting for months and seeing a 4% move. Everybody stay calm. Everybody stay calm. Or the classic energy of the metals crowd. They called me crazy at 22 silver. They called me lucky at 32 silver. They called me again at 40 asking what to buy. That is the emotional cycle in a nutshell. And if you want a few tweet-style lines to flash on screen during this segment, here are some that fit perfectly. Gold is not chasing the news. It is pricing the loss of trust. Silver is what happens when monetary anxiety meets industrial reality. Every empire prints. Every market pretends. Gold remembers. Paper promises are infinite. Real metal is not. Geopolitics is bullish for uncertainty. Uncertainty is bullish for hard assets. Central banks buy gold while telling you everything is fine. That should tell you enough. Silver does not move when people are comfortable. It moves when comfort breaks.